point of interest in the news right now is what's going on between Israel and Iran. I was hoping to have a little bit of an intro here because, as the folks on Overtime know, I've been trying to stoke a pen pal relationship with the Ayatollah. He really shouldn't have left his direct messages open. One of his accounts followed me a while back, so I figured maybe I'll be the person to stoke peace. I would say that my efforts recently have not worked out well because peace seems further away than ever.
Is he the most famous person in your contact list?
No, you are, Tom.
Okay.
That's called job security.
I was thinking, we have a rising star sitting. Our next guest oversees 150 billion gallons of oil. He has an $11.5 trillion sovereign wealth fund. Okay, so what's interesting about this particular round, this time around, is that the markets are behaving very differently than they did during the previous two flare-ups. In April 2024, you have the usual oil price spike, but stocks really take it on the chin, and it's about a month from when the incident occurs to when the markets recover back to their pre-Israel-Iran missiles flying highs. And we have another incident in October 2024, which people may not remember so well, but oil prices spike. This time around, stocks 6 days before they recover to their pre-news highs. This time around, it was only a day. It didn't matter that oil prices shot up by 7, 10, 15% in the span of 2 or 3 trading sessions. Stocks yesterday had erased all those losses, basically got back to where we were on Wednesday last week before the news hit. So I'm curious as to why you guys think this is occurring. Do you think that markets have become desensitized to this particular flavor of geopolitical risk, or we saw with India and Pakistan, or Russia, Ukraine still going on? These things aren't moving the markets anymore. Are we complacent? Why are we so desensitized right now to what are some alarming headlines?
How could you define it any other way? I mean, I think it's because I think it's just because that's over time the market. There's been no reward. Like you haven't gotten rewarded. Like the whole macro argument, which is, know what's going on, kind of, read the room type thing. It hasn't worked. Mm-hmm. So if you've watched something happen, like, Russia invades Ukraine or whatever it is, and you liquidate it because you thought something was going to, there was this geopolitical crisis, it hasn't worked. So, I mean, you can basically, how many times can you do that to investors? Eventually they go, you know what? Just keep me in. I don't care. And that's what you're seeing now. We have become desensitized to certain bits of news because it hasn't paid to try to game the news.
Maybe it's not desensitization, Tony. Maybe it's because we have faster information dissemination. I recall you making a comment in the past week or two how you would have loved to have something like Twitter on the floor in your pocket when you were a trader, because if you had that information edge above everyone else, you'd be able to react much faster.
He would never, it wouldn't have made one damn bit of difference.
Sure, fine. But
just
the point is,
because I'm not a good trader. But if I was a good trader,
there's nothing to do with him. There's nothing to do with him.
I know
There's
no
such thing. There's never been an advantage. There never will be. The markets move. You think he could have got something on Twitter that he could have traded off of? Not a chance. Even 20 or 30 or 40 years ago, not a chance.
That's my point. Isn't that if he had the news first, he'd know how the prices react. It's more of because everyone is getting this information disseminated much quicker through all layers of the market. Does that nip any story really in the bud? We've seen this time and again over recent months, and it just.
Yeah, but I don't think that's the story.
What's the story?
I think the story is since the beginning of time. Mm-hmm. As soon as there's a bit of information, it makes its way into the most liquid marketplace, and it impacts price. No matter what, go back 40 years ago, 1985, and you would have the exact same thing, although it would be reflected in the S&P price instantaneously, and you wouldn't even know how. So that doesn't matter. The story here is that the market has essentially learned to. It doesn't. You do not get rewarded for trying to time macro events. That's the whole issue.
That very well may be the takeaway here. What's the options market telling us on the other side of what's been the past week of these headlines? Are we treating the tensions as transitory or permanent headline risk? I only ask because what you're seeing in stocks is very different than what you're seeing in oil right now, where IVRs in oil are still sticking around 100.
Actually, volatility in oil has exploded this morning. It's the high. It's my oil position is my worst performing position. I have no deltas. So oil is the most outrageous. It's the only thing where volatility is truly impacting, impacting P&L, impacting price. Option prices have just exploded in oil. If you look at the, I'll show you right now, it's crazy. But
no,
if you look,
sad enough, you go to a full standard deviation or more, up to 94 or so on oil. Oil's 72, with really only a under $10 expected move in the next 30 days. You're going $30 out of the money. I'm sorry, $20 out of the money, and you're getting options that are $1,400.
The change in the straddle today, it's up, almost $1, and that's a crazy,
That's $1,000.
Yeah, it's $1,000. So which means that the expected move has jumped in crude oil. The expected move in July, which is 30 days away, has already jumped, about a full dollar today, which is really big.
You look at the 72 or 72 and a half straddle, and it's up anywhere between 80 cents and $1. And that 72 and a half straddle would have had a little bit of bearish delta to it yesterday, because the stock, the future was trading closer to 70. And with that bearish delta coming into effect, basically is bringing 80 cents. You look at the 70 straddle, that would have been delta neutral. It's up about 50, 60 cents. So it definitely has some volatility expansion in it.
Yeah, the 16 delta wings are up almost 80 cents. It's a huge move today. So crude oil has been impacted by what's going on in the Middle East. That I would say is the one marketplace where you're feeling it. That I don't think it's anywhere else.
Wouldn't you say that commodities have that kind of effect to news a lot more than equities?
Yeah,
Go ahead.
Yeah, fair.
I mean, for like natural gas, even everyone's saying, why is natural gas moving? Iran produces about 6% of the world's gas supply. They don't export it. It's consumed domestically. But if you're destroying all their gas facilities and they're going to keep the economy up and running, they're going to have to import this gas now. So it's more demand on top of unchanged global supply. And so there, you say the commodity pass through. Obviously, we can talk about gold and silver. That's not so direct. But the energy commodities right now, it's ground zero for everything that you're seeing in the news. And it's a place where if we're going to see sustained volatility in the market, it's more likely to be here than equities, for sure.
Yeah, except natural gas, the volatility hasn't moved, and it's not this natural gas has jumped a little bit, but that's about it. It's really the whole play is in crude oil of all the different commodities.
Fair enough.
And you can go into the XOPs of the world too if you want to get smaller, right? I mean, you're going to get the same kind of reaction.
Yeah. Well, Good luck trying to get something done in there.
Well, that's kind of it. The energy companies really haven't done a ton of anything interesting here the past week. Oil's up, natural gas is up a bit. The energy companies are higher, but you're not even seeing a big move in bonds here on the other side of this. You're not seeing that kind of safe haven move that you would expect to see if this was a permanent type of event for the market. So Are you guys surprised by the lack of significant sectoral shift towards a bond, towards the energy companies and XLE and XOP, OIH, what have you?
Sadnov?
Are we surprised?
Yeah, you were a long bond guy. When you're looking at the news over the weekend, you're not like, oh, this is probably good for bonds.
I don't know if I thought that, Chris. You mean you thought there'd be a flight to quality?
Yeah, probably a flight to quality.
No, I didn't think about it that way. I thought bonds were cheap relative, but I didn't think about it as a flight to quality.
Okay.
Yeah. No, it wasn't a flight to quality for me.
Well, there really hasn't been. If you're looking at Lockheed Martin or any of the defense companies, it's not like they've seen a huge surge to the upside the past few days. They've moved higher, they've outperformed the market, but today they're all trading in a little bit weaker. In any event, if we could shift the conversation here to talk about a piece of information that maybe is something that would interest the folks who typically tune in for the Tasty crypto segments. There obviously has been news about stablecoins recently. Tom, you mentioned that Vanetta's covered what's going on with JP Morgan. I want to take a different approach to this because there's been some talk of Walmart implementing a Walmart stablecoin, a Walmart coin, if you will, where you would need something like a digital wallet, not dissimilar from what you see with like the PayPal USD stablecoin. For those that are unaware of the way stablecoins work, these are digital assets that are used for payment or settlement pegged to a fixed monetary value. And there's currently legislation making its way through Congress, the Genius Act, that would set up the guardrails for such an industry to develop a little bit more, well, out of the fog, out of the dark over the next several years. But to that point, I can't help but wonder if Walmart is having digital wallets for its customers, which tend to be on the middle or lower income side when you look at their financials. This could be something that poses a problem for financial intermediaries like a Visa or a MasterCard, or even community banks, regional banks that service a lot of lower income consumer debt. I'm just wondering how you guys feel about the stablecoin conversation. It's not something that we've ever talked about. Do you find it having utility in the economy? Do you think this is something that people should be paying more attention to? Or is this just a new technology that's part of payments and who cares?
No, I don't think it's a who cares thing. I think I think from talking to the various crypto firms, and not various, but a few crypto firms, and talking to people in the industry, there is definitely a decent percentage of money flowing through stablecoins. Tasty's about to accept stablecoins for funding, and we've been working on it with Zero Hash. So I mean, there's definitely demand for it. I've seen a lot of event-based sites, accepting stablecoins. There's obviously crypto gambling sites around the world and things like that accept stablecoins. I think when JP Morgan and Walmart and everybody else get in, it's real.
Has it gone mainstream, or has it jumped the shark when Walmart?
No. Mainstream, I mean, and if you watch what's happened in the Circle IPO as well, it's been insane. I would say I think it's more than a short-term phenomena.
More than a short-term phenomena.
Yeah, I think it's real. I think it has legs. I think it has legs. I don't think you're going to be necessarily, jumping in and using stable coins tomorrow. I just think it has legs.
So if this is a corporate-backed currency, what does it take for consumers to fully buy into these pseudo-corporate-backed currencies? Is it just simply brand trust?
Yeah, it's going to be brand trust. It's going to be brand trust. There's going to have to be a reason to convert. There's going to have to be a reason to use them. There's just going to have to be a reason to do it. Like, I'm not exactly sure, how Walmart or JP Morgan, I'm not sure what their story is. I don't know how they're going to, I mean, are they going to give you a discount if you, pay with a Walmart stablecoin? Are you going to, I don't know what their game plan is.
I mean, I kind of see it as when I load up my Dunkin' Donuts rewards card and go get my iced coffee.
Yeah, sure.
And then I get Dunkin' points back on the app that allow me to get free things. So probably I'll get issued Walmart stablecoin back instead of points.
Yeah, but what's the advantage for them if it's all backed? If it's backed one for one, how do they save any money? I mean, I'm just saying. I don't know. I haven't figured out. I understand that for me, it all works. The cool thing about stablecoins is as long as you can keep crypto prices going higher, you can kind of siphon off some money into stablecoins and people can pay for stuff and it feels like you're not even losing anything. It's kind of like there's this constant Ponzi game of smoke and mirrors and everything, and you're just playing with profits, and it kind of all makes sense. I mean, I'm just nervous when something eventually goes down, if it ever goes down, how they're gonna do it. But I don't know how every single company, the last thing you're gonna want to do is have is use a Walmart stable coin, a Amazon, a JP Morgan. I mean, I'm not sure, a Costco. I mean, what are you gonna do?
Well, that's trying. Is this just digital version of store credit, or is this something that
right.
seriously upends, right? So that's kind of, because if otherwise we should have like a and a Tom stablecoin and a Tony stablecoin. And
are you going to have a portfolio? Are you going to have stablecoins for every single company that you do, so that if you fly American Airlines, you use theirs and you get a discount or something? I don't know. I'm not sure.
More frequent flyer miles.
I mean, what's the advantage other than they can carve out the 2% Visa fees?
It reminds me a lot, because if you look at some of what Walmart has said and indicated, it seems like they're going to have an automatic conversion mechanism behind the scenes, akin to what Overstock did a few years ago when they first started taking Bitcoin, which is to say that when Overstock took the Bitcoin, they did not keep it in their treasury. They immediately converted it back to US dollars to avoid any of that exchange rate risk. And Walmart seems like their intent is, if they accept their, the Walmart stablecoin, whatever we're going to call it, they would convert it back to US dollars immediately. So it's a payment system. You're going to go to checkout.
Yeah, I understand it's a payment system, but do you think it's just are the companies that are going to lose out Visa and MasterCard?
Maybe.
I mean, are they all doing this for the 2%, just to carve them out? I mean, that could be it. I mean, if you're Walmart, that might be it. I don't know.
Like, the credit card fees, killing the credit card fees is probably the only reason to do this.
Yeah, like right. Like, American Express charges what, 3% or something. So like, if I use my credit card, places are marking it up by 3% now. Does this kill Venmo and whoever marks it up by 3%? Like, the whole thing is this is just clean. So everybody. I mean, maybe a 2% is a massive number if you're Walmart. Probably is.
I'm sure it is.
Yeah. I mean, I don't know.
It's so funny that you mentioned that. It was in some,
because nobody pays with cash anymore, so everything is everything is card related. So I mean, that might be the whole story here. I don't know.
Yeah. So in 1976, the government put a temporary ban on credit card surcharges, and then there was cash discount acts. So instead of going to a cash register and being like, cash is this amount, and if you pay with credit card, it's plus 3%, it changed the language so that credit cards would be seen as the neutral default choice. And if you paid with cash, you'd get a discount. And that's what changed people's psychology about why they should start using credit cards. What that's where we find ourselves.
My Taiwanese source just wrote, Walmart's going to take the real money and then issue stable coins while they collect interest on the money.
So it's just treasury? Okay.
I don't know. I mean, it's a thought. It comes from my Taiwanese source, Peter.
Well, it's not quite that simple.
Why?
Because they have to collateralize everything.
Mm-hmm. Mm-hmm.
I don't know. I don't think it's that simple, but I think it's more to save. But there might be a cash flow play in there. Or there might be a spread. There could be a spread.
Stablecoin does have yield, I'm being told, too. I don't know but if you are just holding the coin, you're not getting the yield, are you?
There could be a spread. There could be a spread. I just haven't studied it that much, but there could be a spread. I know that, I know the fee structure on our side, it's minuscule. It's like, I mean, when you think about it, like a credit card is like 200 basis points and a stablecoin is like 2 basis points.
Yeah, yeah.
So it's like 100 and, it's you save 198 basis points. So maybe that's the play.
Yeah. I mean, instead of a 2% fee, it's a 0.02% fee.
Right. So maybe in the end, and it costs, it does cost nothing to create. I mean, it's virtually nothing. You got to do a little regulatory stuff, but it's not the technology's like a brain dead stuff.
Well, in the past 2 weeks, between the stable coins and the news that Meta is going to allow companies to vertically integrate their advertising directly through their platforms, which is to say that instead of having an outside advertising agency bid up for rates and make the copy, companies can just have AI do that all for them. We've seen some traditional companies, your Visa, your MasterCard, your ad brokers, they've started to suffer here. So maybe this new technology will be disruptive. Consumer benefits remain to be seen. But right now, I think it's absolutely worth noting. And then, by the way, speaking of Walmart, it's down 9 days in a row. Is that what I heard earlier? When was the last time that happened? Maybe there's
Walmart,
a plan there.
I haven't looked at it. It's down 9 days in a row.
That's what I heard on the radio earlier. That didn't make sense to me, but that's indeed what my chart's showing. 9 days in a row, lower closes.